US30 is going to be one of the most common pairs to trade in 2023 and the following years, and it's probably important for you to know exactly how to trade it. And honestly, if you don't know how to trade US30 properly, you're probably going to blow your account and just lose a ton of money. So in this video, I'm going to break down exactly what you should be doing and should not be doing when trading US30. All I need you guys to do is dedicate the next 15 minutes into listening to what I'm going to say and being patient. This information may change your trading forever if you actually apply it. If you guys do want to be mentored by me, I do offer one-on-one mentorship. All you have to do is send me a message on Instagram and we'll see if you're a good fit. Also, if you guys could show some type of love, like this video, drop a comment below, or subscribe to my channel if you haven't already. And also check out my channel. I have a ton of other videos based on trading and US30. Now, without further ado, let's get into my computer. Alright guys, we're going to go over the necessary steps on how to trade US30 in 2023. First off, we need to go over what is US30 so you guys are familiar. US30 is an index. This is not a Forex pair, therefore it's going to be much more volatile. There's going to be much more aggressive moves that are happening. The thing that I really like about US30 though is it follows the technical aspect extremely well. Today, it's really choppy. I don't find this as smooth markets. I would not be trading these markets, but there's been previous days where the market is really clean. And honestly, guys, like this whole freaking week has just been crap for US30. That's why I've been trading NAS 100 lately, and you guys should as well. So US30 is the Dow Jones, and you guys are probably like, what is the 30 consistent of? That's telling us that the Dow Jones really shows us the top 30 companies in America. So if you look up on Google top 30 companies in the Dow Jones, it'll show you all these companies like Caterpillar, Visa, all these other companies that are a part of it, and you guys can really understand it better. So understand though that US30 is an index. This is not a Forex pair. You guys have to be cautious when you are trading this, and you guys need to understand that it is a different ballgame that Forex pairs and even gold too. So definitely be cautious. Like right now, we're actually going to go over this right now, but the market just opened up, and you could see within literally 3 minutes it shot up already 1,400 pips. So yeah, that's 1,400 pips by the way. So you guys, massive moves are happening on US30 right at the market open, and that goes into our timing. So do this time to trade US30. The best time and the only time that you guys should be trading US30 is at 6:30 a.m. PST. That is 9:30 a.m. EST. Okay? This is the best time to be trading US30. And you guys are probably wondering why. The market opened. So like, if you guys think about the stock market, in New York, they have the actual center where the stock market opens up, the equities market opens up, all the major places to trade open up at 9:30 a.m. EST. So at 9:30 a.m. is when ding 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 the stock market bell opens up, and that's when all the money is fluctuated because the Dow Jones is a U.S. index. It's based in the United States of America. So therefore, you guys need to understand that when the U.S. is waking up, what are me and you doing? We're starting to buy things. That means the economy is starting to pick up. That means that people are going to be making transactions. People are going to be buying and selling stocks. So that at that exact time, 6:30 a.m., is when all the money is being fluctuated into the markets, or money is being pulled out of the markets. And the easiest way to think of it is, if the markets are going up, that means money is being flushed into the market. If the markets are going down, that means money is being flushed out of the market. So it's very easy, but the main times that I trade are usually between 6:30 a.m. to 7 a.m. I want to get a trade in that 30-minute window. That is like the most pristine time to get into the markets is at 6:30 a.m. at that exact time. And if you can't find a setup at 6:30 a.m., that's fine. I'm usually using the minute 15, so I'll look at a couple minute 15 or I'll look at a couple 15-minute candles after to see if a setup will appear. So when it comes to like finding my best setup, I want to go to NAS for this just because NAS has been way cleaner. But guys, the best thing that you can do is look at two things to define what's going to happen during the New York session. The first thing is look at this Asia session right here. So this indicator that I have, if you guys go to indicators right here and you type in Asia, it's going to be the Asia ranging kill zones. So once you guys get this indicator, it will pop up on your screen. You can make it whatever color you want. But I think that some of the most important aspects to look at when it comes to trading are the Asia session and the London session. So we have to go to 12 a.m. right here. So after this candle 23.45 closes, boom, it's the London session. And there are going to be decent moves. In my personal opinion, I'm trading at the market open. Okay, so big thing is to look at the previous sessions and it's going to give you feedback on what's going to happen during the New York session. So a perfect day for me, I want to show you guys like the perfect trading setup. I like to see very small moves happen during the Asia session. And then in the London session, I like to see it break the high of the Asia session or the low of the Asia session. But it has to, when it breaks the high, it has to maintain staying above that high or maintain staying below that low to really give me confirmation on what's going to happen for the rest of the New York session. So we could see it broke the high of the Asia session right here on this candle, right before the New York market opened up. So it hit it, came down. Here's some type of news. I think this was CPI that came out. So CPI pushed the market down, trapped everyone to go short, and then it pushed up. So one thing that I do when it comes to trading is I wait for the candle to completely close to give me confirmation on what's going to happen. And guys, all the time I would just enter a trade because, oh, it's pushing down, it's going to go down. And that's what a lot of traders did. So this candle with this wick, it once looked like a candle like this. It was just filled red at one point. And all these traders were like, sell, sell, it's going to drop down, sell. And they got all these people to sell right here. And then they just shot it up. They probably had their stops right above here or something or above this high. And then boom, just came out and stopped them all out, just ate their money. And then they just continued to push up to the next key levels. So this is my ideal perfect setup when I see very small consolidation in Asia, then very small candles, and it breaks a higher the low in London, and then it continues in that trend during the New York session. The way to think of it is there's market makers like the big pockets that really push a market. Like, what are they doing during these previous sessions is what you need to be looking at. Okay, so the next thing we're going to go over is like the brokers that you guys should be using. All right, guys, the first broker is Henko Trade. I've been hearing a ton about this broker lately. A lot of my students have been telling me about it. One key feature that I know about this broker compared to the other one that we're going to give you is you can trade full US30 indexes with like $100 or $200. So the lot sizes that you would use for Forex pairs, let's say if you have a $100 account, 0.01, a $1,000 account, 0.10 lot size. They are the exact same with US30. So you guys can actually trade US30 with like $100, $200 versus other brokers. Like the lot size for Hugo's Way is completely different. If I have a $1,000 account and I'm using a 0.01 and I take a 1,000 pip hit, I'm going to lose $100. But if I have a $1,000 account on Henko Trades and I'm using like a 0.01, I'm only going to take like a $10 loss. So when you're trading, they say that you guys should be risking like 1 to 3% of your account. That's in my personal opinion. And I think that's extremely smart. So with you guys, you can either go with Hugo's Way, that's the one that I personally use, or you guys can use Henko Trade. It's 100% up to you what you guys want to use. The last thing that I want you guys to do is create a trading checklist, and you guys can copy mine if you want, but a trading checklist is really going to keep you in line and make sure you're taking very high quality trades. You guys do not want to be just taking every single trade. And I was just on a live trading session with my students, and yeah, we saw a trade on that, or like NAS 100 was about to open up at the market open. But I told everyone, like, yo, I'm not trading today. It's pointless. I don't see a trade. I'm not going to force anything. And the best way to do that, to avoid forcing a trade, is by creating a trading checklist. So you only have high quality setups that you're looking at. And if your high quality trade setup is not there, then you are not taking a trade. So this is my trading checklist, how I have it set up, and I'll explain it in a second to you guys after you guys get this. So I have all these boxes right here. If you guys want that, just go right here and click this checklist menu. Boom. And then it will appear. So I can like check it off like this. Okay. Now let me explain this. If I have 2 of these boxes marked off, that's a C plus trade. I'm going to risk 1%. If I have 3 of these boxes marked off, still a C plus trade. If I have 4 or 5 of these boxes marked off, B plus trade. If I have all 6, that is an A plus trade. I'll risk 3% of my account. So you guys need to understand, not every trade, you're not going to risk 3% every single trade. You're not going to risk 2% every single trade. You need to see if it fits the qualifications to make you or to allow you to risk 3% or 2% or whatever it may be. That is all I have for you guys in this video. I will see you guys on the next one. Peace out.